Even more US banks downgraded. Is another banking collapse on the horizon? Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, welcome back Branko, who's been talking about the issues of the US banking sector for quite a while now. He was right there discussing it all with us accurately at the start of the crisis earlier in the year, and he's now back concerned about it again. So you've definitely been ahead of the curve on this topic, Branko. How are you going today?
Yeah, good. Thanks for having me on. I'm very excited to talk about what is probably my favorite topic at the moment. We were discussing this stuff, a while ago with the Credit Suisse saga, and we kind of foresaw a lot of these issues happening. We'll see what we discover today.
Well, it wasn't long ago. It was only a couple of weeks ago that we had some initial more banks being downgraded, and now you're back again today saying that there's yet another lot. Why are these particular banks being downgraded in the new lot today?
Yeah, so the official stance that the S&P rating agency put down was higher interest rates and people withdrawing their money to higher interest-bearing accounts. But in my opinion, that's basically just like a way, because higher interest-bearing accounts, in my opinion, it's just people are scared and they want to take their money out. It's not really about getting an extra 0.1 or 0.2% per year on their cash. It's more about just, if I have money in these regional banks, I'm worried after what has happened, in the past 6 months or so. So let me put my money out. So there definitely is more fear than what their official line of statements were insinuating. So that's probably the biggest reason as to why they'd be downgraded.
And there's probably an element of time there as well when I think about this, because even though there was that initial rush when we first heard about these issues earlier in the year, where people were pulling their money out, if you weren't quite sure, but you've got that little bit of doubt in the back of your mind, it wouldn't take, over the course of the year, as time's moved on, if another opportunity came up to take it out, people don't necessarily do everything on day one. It takes a little bit of time probably for that to unfold. Would you agree? That could also be adding to this. It's a slow draw.
Yeah, and Credit Suisse is actually a great example of that, because they had their, if we remember, they had this line of swap line credit thing going on for a while. They were getting money from the US government to save them. And that rumor that they were going under happened months and months before the collapse and the UBS buyout. So these things can take time, but then some are even, significantly more rapid than that. So it can go either way, but the bigger ones do take time for sure.
It can take time to unfold. So what is the significance of these particular downgrades from your perspective?
Yeah, so I think the key takeaway, which I'll put up on the screen, is basically a graph of commercial bank liability deposits in the US. And we saw, to no surprise, a big decrease during the SVB debacle. And that's highlighted on the screen as well. And right now we're kind of ranging, it's not doing much. But the big thing with these downgrades, and we had, like we said, Moody downgraded a couple of weeks ago, is if we do see a spiral situation where more continue to downgrade, that's going to induce more fear. You're going to have that graph continue to decrease and more people withdraw their money. And then we could see another significant bank collapse and bank run, because the fear that these credit agencies kind of inspire with their downgrades, particularly of these regional banks, because they're not as big as obviously the big four in Australia or big banks in the US, because they're relatively small, does create a lot more fear. So it is significant, just given the sheer amount of liabilities, the bank liabilities that people are currently withdrawing.
So you've spoken about the spreading nature of this as we're seeing at the moment and as we've seen recently, but how does this actually tie back to Silicon Valley Bank? Because that was really, from how you described it previously, that was the real moment that brought it all to a head before. Are we back at that sort of moment again? Is it the same thing? Are they related? Can you maybe just give us a bit of background around that angle?
The reason I think it's interesting to revert back to Silicon Valley is not because of the graph, but also because on March 8th, which was about a week before the collapse of SVB, Moody's actually downgraded Silicon Valley Bank, and then that induced a lot of fear. And then we saw a very quick collapse. But the interesting thing, I think, of that was that it still had them as an investment grade, in an investment grade tier. So it wasn't even like a very significant downgrade. So the takeaway from that is basically when these credit rating agencies, when they downgrade a bank, it's usually not, it's a lot more severe than what they're letting on in terms of the rating that they give, right? Because if they had access to SVB's financials, they would see like, oh, like, you know, shit, this is quite bad. This isn't an investment grade, but they still have it as an investment grade. So the fact that it went from it just went down, right? That induced fear, and that still understated the real problem itself. So basically, even small decreases in their ratings can have dramatic effects. Yeah.
It's kind of a stupid system in some ways, isn't it? Because I remember recently with the downgrade of the US, right? When they were effectively saying the US debt being downgraded, and they go from AAA plus or whatever the rating is to AA. Like, it's all designed to be very vague. It's not a 1 to 10 system or a 1 to 5 system. It's a AAA plus to a AAA minus sort of, you know, it's all designed to give you the illusion of confidence with a slight adjustment. But I think what you just said then really hits the nail on the head. If they're downgrading it at all, it probably highlights there's something actually quite wrong underneath that, because they are trying to give the illusion the whole time that everything is very good. Is that how you sort of see it? It really, because to me, you go, the whole rating system doesn't make a whole lot of sense to the average person.
Yeah, I agree. I think the fact that they're being downgraded in the first place is alarming, let alone the size of the downgrade. I mean, in the case of the US, like, yeah, that's an interesting case, because to go from AAA to, you know, I think AAA plus to AA, I mean, to have that difference, you got to think from the credit rating agency's perspective. Most of the time, they probably don't want to downgrade these powerful institutions. So if they're being kind of forced to, it's because the evidence is overwhelming and they need to do something about it.
Yeah.
So,
I mean,
there is a bit of play there.
We would certainly argue that with the US, you've got, you know, out of control debt, you've got out of control government spending, you know, all this stuff is out of control, but the rating's still high because ultimately they've got the US dollar, which underpins global trade. So, you know, I can see there's arguments why you're not saying it's just going to collapse tomorrow.
Yeah, I'm not saying that.
No, but to say, you know, oh, it's still very, very good is, you know, it deserved that credit downgrade when you look at the actual situation fairly objectively. Yeah, it just, you know, it's just a point that bugs me, because they really don't make it very clear or useful to the average person when you can't even interpret the scale, really. So I suppose, going from that, what do you think happens from here? What's your future expectations if we bring it back to this banking idea? Do we see more downgrades? Are there more collapses coming? How do you see us, you know, a few months from now? Is it imminent? You know, timing wise, where do you see us, and what do you see the future holding?
So I do think we'll continue to see a series of downgrades from these smaller regional banks in the US, like of different ones. And I think often they work with each other, so it makes sense that if one has a downgrade, the other might have a similar downgrade, because they're intertwined. If they have a lot of assets that they have in this bank and then they're going down, you know, their rating could go down as well. But I think it won't really have a huge impact until we get, you know, a higher tier, like a bigger bank that suffers a downgrade, which, you know, we could have soon. So I think just keep an eye out for when we see, you know, a bank similar to the size of SVB, for example, have a downgrade. Then it's going to be, you know, big panic time, because, you know, it's kind of starting at the bottom again, right? All these small banks that are going under, and it's working its way up. It's slowly coming to the top, and the top banks. So definitely keep an eye out for larger banks if they have credit rating downgrades.
It's been such an interesting discussion, because I know Jim Bianco referred to it as the bank walk right back when it had started, saying it wouldn't be fast, but the danger of that is that people stop paying attention. And you haven't stopped paying attention. You've been on it the whole time to go, well, hang on, it's still happening in the background there, because it is easy to, like, it gets everyone's attention when something blows up. But it's easy to forget about it when it's just still going on in the background. So yeah, I think that's really valuable in keeping it front and center in our minds, or at least reminding us every so often that it's still happening.
I agree. That's a great point to kind of summarize the whole discussion. This is more of a bank walk than a run. And when we do have those mini bank runs, it does, it is crazy. But in the background, we do have this just slow decline of our banking system, basically.
Yeah. So it's definitely still one to watch. Well, thank you, Branko, for that today. It's a timely reminder yet again.
No worries. Thanks, Chris.
Thanks everyone for watching. Remember, if you have any questions for Branko, for myself, or any of the guests, or any comments that you want to make, reach out on the social platforms. We do see those and pass those on to everyone. That's us for today. We'll be back on Tuesday next week with Alex to discuss all things markets and metals. Until then, have a great rest of the week, everyone.